Hi everyone and welcome back to today's morning report on Tuesday the 10th of May with me, Rich Perry, market analyst at Antec Markets. Let's look at Eurodollar now, and are we starting to see a little bit of the consolidation in the euro? We've just basically seen just very slow drift lower the past couple of days. You've seen non-farm payrolls Friday didn't really sort of break to the downside. 1384 held on non-farm payrolls Friday, just very slightly lost a bit of support, about 10 ticks lower again on the low. Yesterday and then today another sort of 5 ticks to the downside. So you're just seeing very slight losses, but nothing too significant. And this is sort of beginning to reflect in the momentum indicators. The RSI sort of beginning to flatten off around the 50 mark. Also the stochastics as well. MACD lines aren't really doing anything. So this is all coming above this sort of pivot band that I've got in at 1330 area, which is those old highs from late March, the support band from April, and then I think you're back towards that level now. So I think that is sort of still possibly where we're sort of drifting back to, and I say drifting because you're very slight lower highs and very slight lower lows. But again, you're sort of beginning to lose the impetus in this selling pressure, and I think 1330 is possible, but I think that just generally between sort of 1330 and just basically where we are now, I think there's a pretty reasonable sort of band of support that you've got from these old levels from April. So you're basically back into this sort of 50 tick band now between 1330 and 1380, which is a support area, and I think that could well be where we start to see the next the next higher low. But to be honest, you are still waiting, I think, for this confirmation of support if it is to be seen. But I think it's on the euro at the moment. It's just a very slow grind, and I think we are waiting for a bit of a catalyst, arguably, to sort of generate the next move. But at the moment, it's just very slight drift. I suppose you'd start thinking about the resistance levels, so you'd think about the reaction high that you got 1420 yesterday's high, and then obviously the non-farm payrolls reaction high at 1476. But I think you still need to see a fair bit of sort of confirmation to really get the traction. RSI on the hourly chart above 60 would probably help. MACD lines above neutral again would sort of be a signal that this corrective phase might be over, because that's basically where we've been in throughout this phase. So a couple of sort of indications there. So if you saw it, might start to see the bulls re-entering, but there is still a lot to be done. And 1465 is that long-term resistance, or long-term range resistance that became supportive on the way back, and basically was resistance again on that non-farm payrolls report announcement. So that is your sort of resistance overhead that you really need to get above for the bulls to sort of regain the control again. But for now, it's a bit of a slow grind on Eurodollar, and we're sort of waiting for the next real direction. So I wish you good luck in your trading today, and I'll speak to you later.